off with the test. And it's gonna be on the right-hand side of your folder. You've got notes on there as well. But we're gonna start off with the test of, we're gonna see how much you know, okay? So the first question, number one, this is when doing a VA mortgage, VA does not require it to be your primary residence. Is that true or false?
False.
False, correct, okay? So elaborating on that, there's also no time restrictions that the veteran has to occupy the property as well. And when they're purchasing the property, there has to be intent to move in. So I had a guy that was being relocated to Florida with his company. Closes on his house a week later, the company's like, wait a minute, we need to put you in our Georgia office because the guy there just left.
Oh, no.
It was okay, because when we closed, he had the intent to move in.
Okay.
So he rented it out and he got another house.
Oh, okay.
Yeah. All right, number two, VA never requires a down payment. True or false?
True.
It's false.
Oh.
So if somebody other than the spouse wants to be on a VA loan, it's possible, but they're subject to a down payment requirement.
Gotcha.
And they don't insure all of the loan, only the veteran's portion of it. Also, if you want to do a jumbo loan, so the Fannie Mae loan limit is $548,250. So if a veteran wants to purchase above that, they're just subject to a down payment, unless they're a Purple Heart or a certain designation. Then they can get. I got a guy, Dennis Petro. He borrowed $900,000.
Wow.
And
So
the
you're
sales
saying
price
with
is
Purple
$900.
Heart, you can get jumbo.
Yeah, there's certain ones that you don't require down payment, but otherwise normal veterans. Okay. All right. Number three, if a veteran has an assumable mortgage, only another veteran can assume that mortgage. Is that a true or false statement?
False.
False. Correct.
Like Healy's women.
So FHA and VA loans are assumable, okay? But if a non-veteran assumes a veteran's mortgage, it also ties up their entitlement. But if a veteran assumes a VA mortgage, then they just switch entitlement. Okay. All right. VA has no monthly mortgage insurance. Is that true or false?
So it's a one-time payment, I think.
It's true. It's true. There's no monthly mortgage insurance. And in your folders, you'll see the next document on the right-hand side. I put in here the funding fee table. So if you guys want me to leave you a couple of these folders, let me know. But the funding fee table is in here. So when you're purchasing a home and you're using your VA, there's a funding table. It shows you in here, if you're a first-time user, it's 2.3%. But they allow you to finance it. So they allow you to add it to your mortgage. So if you have your first-time user buying a house for $100,000, 2.3% is $2,300. So your loan amount would be $102,300. Okay. Now, if you have 10% disability or more as a veteran, you're exempt from the funding. All right. Next, 100% disabled veterans are exempt from real estate taxes. True or false?
It's true.
It's true. And I also put, so Matt Caldwell changed the whole Lee County Property Appraisers website, but I did pull from there on the folder, your next handout on the right-hand side of your folder. It shows you the disabled veteran exemptions. So even if they're disabled and they don't have 100%, they still get a special exemption. Now, it has to be done at the property appraiser's website after closing. So when we qualify from the mortgage, we have to qualify with the taxes, because if they never go down and do it, then the taxes are still due and payable, okay? So make sure that they have, if you have a veteran, you want to hand them this so that they know if they have any disabilities. They have some special exemptions, okay? All right, number 6. So FHA loans, if Joanna purchased a house and puts, let's say she bought a house for 30 grand and she put, say 10 grand worth of work in it, and she puts it back on the market in 30 days for 100 grand. Okay, she's flipping it. And FHA says that the borrower has to be, the seller has to have title to that property for 91 days before they can even order a case number or do anything, okay? So my question is, does VA loans follow FHA loans and that there is a 90-day seasoning requirement?
I mean, it's true.
Don't know that one.
It's false. False.
I don't know.
Joanna can buy that house, flip it a day later. VA has no seasoning requirements on
Okay.
that. Okay. Number 7, VA finances all residential property types. True or false?
False.
False.
That is true. That is true. So, VA does all residential types. The only thing is if it's a condo, it has to be on the VA approved list. So your next handout, as of 4/13, I did this list. In Lee County, there's 47 condos. Okay, it's 47 condos that are on VA's approved list in Lee County. So in this handout, I also put the link on here that you can search it. And then I showed you that there's 47 in here. And this was as of yesterday. So that when you go in there, you just make sure you click approved. So these are all approved.
Okay.
And that is the last page on the right-hand side of your handout. Okay. Next. VA will allow a seller to pay off a veteran's debt to help them qualify for a mortgage. Is that true or false? That is true. That is true. And we recently had a kid, he's not a kid, but one of Brian Kane's friends, was a veteran. He had seller concessions. This is probably about 2 years ago, I guess it is now, a year and a half. Seller concessions. Well, he still had like $3,400 left over. So we went back to the underwriter, got an okay, and paid his credit cards off, closed.
Wow.
He was so happy.
Huh?
One time I qualified a guy, his payment was $549, but he owed like $6 grand on his credit card, and the guy, he was buying a $350,000 house. So we asked the seller to give him that money to pay off his car, so we qualified for the mortgage, and we did.
Wow.
VA is wonderful. All right, the last question is, all you need for gift funds on a VA transaction is a gift letter. True or false?
Seems like false.
It's true as, it's true as long as, it's true as long as the donor wires the money directly to the town company, which is what we have done, because it's so much easier. All right, next, you guys are gonna learn a lot on this one. Next, we're gonna talk about the 5 myths regarding VA loans. 5 myths regarding VA loans. Okay, myth number 1. Only the veteran, spouse, or another veteran can be on a VA loan. That is a myth. The veteran can have their fiance, the veteran can have whatever, but they're subject to a down payment. But one other thing I want to point out to you is that a spouse or a dependent can satisfy the occupancy requirement. So I have a guy that is buying from Colorado, and he works there and he lives there, and he says he can work remote. Okay, the wife doesn't work; she's with the kids. They're not here. Kids, they're 23 and 28. So I asked her to, I said, can you provide me with a letter stating that you can work remote? Well, he provides me with a letter that says he can work remote until the work order is put into play, right? So I went, don't worry about it. We'll just say you work there. They sold their house. They're moving in with family. We don't have to count housing against them. She satisfies the occupancy requirement.
Okay.
So she can satisfy the occupancy requirement. We get those all day long. We pick those up from other people. I can't get this loan done. I'm like, well, it's structured wrong. Take it over here, And, or sometimes we got to do that condo class again, just because I had to help somebody else with another lender get a condo done because they didn't know how to read the budget. So I pulled the guidelines, anyway, if you guys have a deal and you're having issues with it, even if I don't have the buyer, I'll help you. That's what we do. All right, this is Myth number 2, this is only a myth. You can only have one VA mortgage at a time. You can have as many as you want,
Wow.
as many as you want. You know, so there's an entitlement that you're charged each time you use your VA. And so what we do is request a certificate of eligibility, and it tells us how much entitlement they have left, and then we have a calculation we use. Sometimes you're subject to a down payment, sometimes you're not. But that guy who bought a house here that the company relocated, he went and got another VA loan.
True.
He called me, he was worried about it, and I said, you know what, just gotta have the intent. And so I emailed, we have a direct link to VA. They said, yeah, no problem. All right, now this is a big myth. This is a really important one, very, very important, especially for this area. Nobody knows, people don't seem to know this. Myth number 3, the seller's required to pay for a termite inspection. So that is a true statement. The seller is required to pay for a termite inspection. So go to your next page. This right here is from VA circular. It's called a deviation. There's 5 states that deviate from the seller being required to pay for the termite inspection, and one of them is Florida.
Oh.
Yep, it's Alabama, Florida, Mississippi, Puerto Rico, and the U.S. Virgin Islands. So if somebody says to you that the seller's required to pay for a termite inspection, you're like, not in Florida.
Yeah.
Just so you know, not in Florida. And that brings me to the next paper in your stack, the next one in. It's the comprehensive rider. So it's the addendum to the contract for a VA. So if you have the listing on a property, let's do it this way. So if you have a listing on a property, somebody presents you with the contract that has a VA attached to it, the second page of that says, seller shall pay for the WDO inspection, which is the termite, a tax service fee, underwriting fee, doc prep fees required by the lender, and for recording fees. This, when you have this addendum presented to you, that is a seller cost. So if your contract reads seller to pay $4,000 towards buyer's closing costs, that's buyer's closing costs. This is the seller closing
So
cost.
that would be on top of.
So that would be on top of the 4,000. So you have 2 options. One, you can cross through all of this and have your seller initial saying, we're not gonna pay that. And then they're gonna come back to you and go, well, seller has to pay for termite. You're gonna go back to them and go, no, they don't. Okay. So you can either cross through everything and have an initial, or you can go back to the agent and say, how much is this gonna cost my seller? So you can negotiate it in with the price. And this happens all the time. We go to closing. When we go to closing, you know what they say? Well, my seller's not paying that, we won't close. Right now, we have 2 of them, and we won't close. Well, guess what? It's in the contract. And you know what they say? I don't care.
They don't. They think they can just like
Right.
walk away from
Right.
the situation.
I don't care.
People are pushing. We're seeing
And
a
so
lot of
what
super
happens,
performance.
the agents are dipping into their pockets.
Yeah.
Because they
Sure.
come back, we have the buyers, obviously,
Yeah.
and they don't wanna close.
Baloney.
Well, that's $1,000 out of your guys' pocket if you have that seller.
Yeah.
So that has to be made very, very clear. So Rick Pitts puts an offer on a property, Colleen Rhodes, I did a class for her. He missed my class. I did a class for her, so he submits the contract, seller, asking for seller to pay closing costs, and she processes through all this. He's like, wait a minute, that seller has to pay for a termite. He goes, so you're handing me Tracy's pre-approval, and you haven't taken her class?
Yeah.
The seller doesn't have, so he comes into my office, walks in, he had to come in. Is that true? And I said, yes, it's true, of course it's true. So that's what you have to be very careful of. And if you have the buyer and you submit it, you gotta make sure that other agent.
One of your myths that you talked about, we have a kind of like an inquiry on here, but they thought that the VA loan had to be your primary home.
It does,
Okay.
it does. But if you're going to purchase another primary, you can rent that out and buy another house.
So it just doesn't have to always be your primary. It has to be the intent to be your primary.
Well, you have to, I mean, if you're buying it as a primary, it's gotta be your primary,
Okay.
right? I mean, unless something happens where the company relocates, not just that I changed my mind. If you're buying it as your primary, you buy it as your primary. But a year from now, you're like, you know what, I wanna upgrade. Can you do my mortgage? Sure, no problem. A letter of explanation stating that now he's married and has kids and wants to move, no problem. No problem, you can do another VA loan. All we do is check in how much eligibility they have left.
Yeah.
And do the calculations on their worksheet, it's all numbers that we plug in, they spit out a number to us. It used to be different, but. And they spit out the number to us, and then from there, you know, we say, okay, yeah, you can buy a house, you know, it's based on the sales price.
Mhm.
So the sales price is 300,000, they have enough eligibility, they might have to put 10 grand down. But they have no monthly mortgage insurance. So I knew somebody had 4. Wow, 4. All right, so make sure you go over your closing costs and make sure you understand that the facility does not have to pay for the termite.
I think that's good to know right now, just especially in your situation, and I'm hearing about it in a lot of situations where, you know, there's multiple offers, it's really hard to get a home right now, and people are kind of going like, no, I don't want to deal with VA. Well, if you take this class and you're educated, you can be able to present your offer of, you know, these things that you're worried about for VA. You don't need to worry about the termite inspection. You don't need to worry about this. We're just like any other offer.
Correct.
If you've got
Correct.
all of that documentation ahead of
Correct.
time, you can.
And if you have like pre-approval, also.
Yeah,
bonus.
yeah, exactly.
I got 3 deals together last week because I had my pre-approval.
Wow.
One was almost identical, but it was a little bit more. They took my deal over a cash deal
Wow.
because the cash deal had an appraisal contingency. So when they
Crazy.
called me and said I had a concern about the appraiser, I picked up the phone, called my appraiser, said, can you get this done? She said, yes, I can. Said, my appraiser told me they can get that done. My appraiser got that done. But the other guy, his appraiser was a crapshoot. It was cash. But he
Yeah.
didn't know what was gonna happen with that appraisal contingency.
Yeah.
So he didn't mind.
Nice.
Good, good. All right, next, number 4, this is very important as well. Very important. The appraiser can deliver the appraisal with a low value without notification. That is a myth. So when my processor Melissa orders the VA case number, they assign us an appraiser at the time, okay? And what happened is, just happened last month. She got an issue from Melissa, whoever orders the appraisal gets a notification from the appraiser if they're having a hard time getting the value. So they issue what's called Tidewater. So they issued Tidewater to Melissa. Melissa got on the phone, called both agents and said, you got 48 hours to get me your comps. And sure enough, one of the comps came up better than what they had. Appraisal came up fine. So if you have an appraisal that comes in low as an agent, you had no notification, 1 or 2 things happen. 1, the buyers dropped the ball, the buyer's lender dropped the ball. Or 2, the appraiser never issued Tidewater. If they didn't, then that's when we want to know to turn it. Which I turned. And I had a value presented to me low once.
Mhm.
And it was an agent that I work with that is very seasoned, that knew that value was there. We put together the comps, put all the information, sent it to VA, sure enough, they returned this value. I turned him in again. It's Jim K-by, if you ever get him, he's the worst. Just write it down. Okay, great. All right.
The worst.
Yes. All right, number 5. This is a huge myth. There are tighter restrictions on credit and the process takes longer. That is not the case. In fact, VA does not have a credit score requirement. So again, Rick Pitts, I have so many Rick Pitts stories. He had a guy that told him that he was gonna get this condo approved VA. So I said, well, can you find out one thing for me? He goes, yeah. I said, find out if the condo has a credit score requirement, because most of them do.
Yeah.
And he goes in and he goes, yeah, condo has a credit score requirement. I go, he's not gonna get that approved. And so 45 days later, comes back, couldn't get that approved. They denied it.
So it doesn't come down to the loan, it comes down to the condo approving.
Yeah, they don't want any discrimination.
Yeah.
So VA doesn't have a credit score requirement, but the condo does. No, we're not okay with that. So it's the lenders, it's the investors that we sell to. Those are the ones that have the credit score requirements, the ones who are lending the money. And that's why I try to tell people, VA guarantees the loan. That's what they do. We're going to go into that with the property conditions. In fact, I had a guy that had filed a Chapter 13. Okay, Chapter 13 bankruptcy is when you pay it back.
Yeah.
Okay,
Chapter 7.
we can do a mortgage 12 months into a chapter 13. If they've been paying on a chapter 13 for 12 months, we can do a mortgage for them,
Mhm.
even though they're still in bankruptcy, and even though they've been in it for a year, on a chapter 13. So we have to have proof that they've made the payments, and we have to get permission from the bankruptcy trustee. I've never had a trustee, that would tell us no, because they have to have housing as long as it's not going from 1,000 to 3,000, you know what I mean? So, they had the bankruptcy discharged. A year later, that property that was in that bankruptcy foreclosed. A year later, it was a Bank of America, which took forever. A year later, he applied for a mortgage with us, but there was a foreclosure on his credit
Yeah.
a year before. And so I questioned our underwriters because really VA does not really have a guidance on foreclosures. They really don't. They just kind of follow FHA, but they don't have their own guidance. So we have our direct link to VA, told them the situation, emailed them, they said, yep, we're good to go. And sure enough, we closed that loan because VA told us we're good to go.
Oh.
So we always run scenarios that are odd by VA, and a lot of times, if VA tells us they're gonna do it, they do it, and they are pro that. Yep. So, they are more lenient on credit, they are more lenient on foreclosures, and they don't have a credit score requirement. VA itself, VA doesn't lend the money, they guarantee it, so.
So if you're getting like multiple homes, they're just looking at like debt to income basically at that point, not
Well, they
even,
rent the house out, we don't have to pay it against them.
yeah, okay.
I have one of those right now. They're from up north,
Yeah,
and they're gonna rent that house up, they're from. I don't remember. Some other place. All right, and so after that, next, I put also in here, a little sheet. I put a little sheet in here on, this is my own personal sheet that I have had for probably 20 years, but I like it because it's simple. And it's old, but it just kind of tells you, these are allowable fees for VA. It's just a guidance, because you're gonna lean on me, but these are the allowable fees on VA. Now, it tells you right here, the following fees are unallowable if the lender is charging a 1% origination fee. So some of these go from allowable to unallowable if the lender's charging a 1% origination fee. And if the lender's charging a 1% origination fee, shame on them. Shame on them. You don't do that to your vets. If you have to charge them a point because they want to lower their rate, okay, they want to do that. But to charge them an origination fee, that's just wrong. That's just wrong. So, and it goes to the second page, but then down here in bold, you can see, these are fees I never allowed. And you guys know what one of them are, don't you? Can anybody tell me what one of them is?
oh, your office fee, your brokerage fee.
Compliance fee.
Yeah, come on.
They're never allowed on VA.
Yeah.
And it says on here, termite inspection. The seller's never allowed to pay for, the buyer's never allowed to pay for termite inspection. But what do we have? We got this. It tells us in Florida they are. Get that. People don't know that. I don't know why, but they don't know that. So this is just a little breakdown of the fees, okay? Then next, I have a sample sheet on how VA compares to other loan programs, and it just kind of shows you how the benefit is to the veteran. Okay, this guy's doing FHA compared to VA, and their payment is less with no down payment versus FHA with the down payment. And then 5% down conventional, you got a $2,300 9 payment versus a $2,000 payment. And then on a jumbo loan, jumbos are great for veterans. Jumbos are great for veterans. This guy, $1 million and $1,125,000, put 14% down versus the 20%. So that's 160 versus 225,000. That's a lot of money. And the payment for the lower percentage is $49.50 versus this one is $47.63. But you're talking about, let's see, what's the difference? 160 to 225.
Wow.
So $65,000. The payment's only less than $200 difference. So that's nice. Okay, let's talk about property conditions.
I think that's what's scaring a lot of sellers away lately.
Correct. So, and that's where I come in. So I had somebody twice now. JJ had one of them. They won't take an FHA deal. They will not take an FHA deal. They won't.
I think that might have been your situation that she called Tracy for, because Christine's got a guy and he's getting turned down a lot for.
So JJ said this, they're not gonna take, I said, all right, fine, let's write it up conventional. We gave her conventional pre-approval.
That was what we were trying to do.
So we did a conventional pre-approval, we had the addendum sign at closing, and all went well.
That's what we have a lot of people asking about, that scenario in specific, if you could explain like how that works.
So the way we do the financing, the contract does tell you the type of financing that they're gonna do on there, but that contract's between the buyer and the seller. The financing is between myself and the buyers. Okay, so the way we do our mortgage is between us. So when we order our appraisers and our appraiser goes out there and it's an FHA appraiser, the seller doesn't know that. It's none of their business. And I tell the appraiser not even talk to the seller.
Gotcha.
All the time. So they have no idea. We just process the loan as an FHA. And then what I tell my underwriters is we'll have the addendum signed at closing. What are they gonna say at closing? No, we're not gonna sign the addendum. even
It's
though
already done.
It's all done.
Yeah.
And you know, it's a good point to them too, to say,
See.
you were wrong. Told you so.
Told you so.
The three famous
We're
words.
so bad.
Told you so. After they sign the addendum, you go, nah. But
Okay, so
Yeah.
you're writing up your contract conventional, and then, right prior to closing, so you guys are processing everything like it's
Everything's
BA, and then just switching over at closing.
at closing, I just haven't signed the addendum. The only thing that seller has to do for the FHA transaction, the VA transaction, is sign the addendum. And if they don't wanna do that, fine, we'll do it at closing.
Yeah,
And we have no problems with doing it at closing. I've done that several times,
okay.
several times.
But you know all along that they're gonna switch.
Oh, I know, we're not gonna switch, we're gonna put them in as an FHA loan, we're gonna finance them as an FHA loan the whole way through.
But until the end.
No, it's all going through FHA.
Oh, okay.
It's just what the
all-
seller knows.
The seller just has to sign an FHA addendum, that's all the seller has to do in an FHA transaction,
Okay.
is sign an addendum, that's it. That's it.
Yeah.
So you know what? Most lenders will require that addendum to be signed prior to closing. And when you go to the seller and you've processed this file conventionally and you ask them to sign that addendum before closing, they freak out.
Yeah.
But me, I'm like, I have them sign it at closing. If they have a problem signing that addendum, I'll show up, then they're really gonna
Tracy's gonna school them.
Yeah. Yeah. So, yeah, you just have the addendums. I mean, that's what we have to do in this market, unfortunately. Unfortunately. It is what it is. We had no problem with the loan. It went right through the way it was supposed to. Everything was perfect. Boom, 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 updates, closing. Oh, here you go. When you sign this, and then they don't even know what they're signing, to be honest with
Probably
You're
not.
signing so much at closing, you're like, okay, whatever, you don't care as long as you're getting it sold that
you.
day.
Getting your money, you're getting your money in an hour. We don't have any funding conditions, so after you sign, we're done. Here,
Yeah.
here's your-
Okay.
Take your money.
Brilliant.
All right, so let's go over property conditions, because I know that people have a lot of questions in regards to that. We're gonna start with the home inspections. You're not required on a VA purchase, to have a home inspection, but it is highly encouraged, Okay, because FHA is not guaranteeing the home, they're guaranteeing the loan, not the home, the loan.
Yeah.
Okay. Now, VA states that any issues post-closing is the responsibility of the buyer. So for your protection, get a home inspection. And then there are no designated home inspections. It's an agent buyer preference. Okay. So, and we get a lot of questions on this. Now, next, let's hit the VA appraisals. I know this is a touchy subject, but so when we order a case number, we're assigned an appraiser versus on our FHAs and our conventionals, we have our own people that we rotate in our appraisers. And I just upped our fees to $5.95 on the appraisals. Now, this is an easy sell to our buyers from $4.95 to $5.95 because with our appraisal management company, they get $95. That's their bottom line. Well, now our appraisers are getting $500. So when the orders go in, they're picking ours first because they get paid more. So I tell the buyer, would you like your appraisal, want your appraisal inside of 2 weeks or outside of 2 weeks? What's it worth to you to get this deal done? And have, it's $100.
It's a fine.
And I'm also offering an incentive to these buyers now that once you're under contract, I request you have all your documentation into me. Everything that we ask for, if you give it to us, I'll credit you $100.
Wow. It's a nice way to get everybody to do what you're
Yeah,
getting
it's
them to
been-
do.
It's been hard getting them to get their documents, I'm not gonna lie. and
Wow.
We're busy, we're busy,
Everybody.
we're busy,
Wow.
we're busy, you know, so. The easier you make it for us by getting all of your documentation. Now, we're gonna review it, there might be some other stuff we need, but you'll still get the credit because you turned in everything that I asked for, everything.
Mhm.
$100. Alright, so when we order the case number, they assign us an appraiser. Now, appraiser's job, this is what the appraiser's job is to do on these appraisals, is to evaluate the property to determine its, we call it the 3 S's, safe, sound, and secure, along with determining the value. So it's the 3 S's we call it, safe, sound, secure.
Mhm.
So one time there was, whatever those little things on the dock, what are those, the wood sticks up, little plank, whatever they were,
Planks.
splinters.
Oh.
So there was some on the dock, and the agent got mad because the appraiser asked them to stand those down. Well, if somebody could hurt their foot on that, you know, that's a safety issue. So safe, sound, secure. Now Jim K. back to him, the kitchen had been replaced, but they didn't put the knobs on the cabinet because the buyer said, hey, before you put those knobs on, we'd like to pick out our own, because they were saw the ones that sell it out on the counter.
Yeah.
And so they said, it was fine, I'll leave them off. He asked us to have doorknobs put on, doorknobs on the cabinets.
Wow.
And so I complained to VA and they said it's not necessary. But in the meantime, you know, you got a 7-day turnaround when you turn appraiser. in.
Yeah.
So anyway, I turned them in again anyway. All right, and then here's a big one. VA does not have a guidance on permitted versus unpermitted additions. I mean, unless it's something that would severely affect the value of the home.
Like a kitchen or a bathroom? They don't care.
If they took the home and it went from 3 bedrooms to 1 bedroom,
Okay.
Yeah. and there's no permitting, yeah. But like the garages that are turned into mother-in-law suites.
Mhm.
go up.
Wow.
As long as the county or the city doesn't care.
Now,
That's what you have to be careful.
yeah, we don't care. We've had it come up, but you have to be careful because if you go to a Wells Fargo or Bank of America or any of the banks, they have their own sets of rules. So people come to me and say, oh, the bank told me this, I'm like, give me the loan, I'll do it. I mean, but the banks have their overlays. They're like, oh, I know it's okay with VA that we only need 6 months worth of child support to show that you've been receiving it, but we're gonna ask for 12, because we want 12. I mean, so I'll give you another example. This was on one of your deals, one of your agent's deals, I forgot whose it was. The loan was with another lender, and they had all the tax returns. The guy actually worked for this company, but was paid cash and didn't file tax returns, say, in 17. Now 18, he was able to give us tax returns because now he knew he was going to file because he was still working for this company. We were doing his loan in March, but as of January 1st, they put him on a W-2. So we ran through DU. All they wanted was verification of employment and 30 days worth of pay stubs. Avoided the whole situation.
Wow.
And so now but the lender he was with was like, I know that that's what VA says they want, but we want the tax returns. Not us. We underwrite directly to FHA, and directly to VA, directly to Fannie. We even sell directly to Fannie.
Mhm.
Cool.
So we can do things like all the time. I've been doing this for 31 years. This is the best move I've ever made in my life. Best move. Best move. I was just talking about that deal we closed that we gave them conventional approval and closed with FHA. They didn't even know. They probably still don't know.
They didn't care. No, they were getting their money.
Yeah. So, and so that was on property conditions. And then the last thing I have for you guys, unless you have any questions for me, is we have promotional flyers for you that we can add you to if you guys need that. So if you're out and you're trying to solicit VA loans, then this is a promotional flyer. You can actually say, I took a class with this girl specialist. Now I know VA. I don't know how you guys are sourcing or how you're doing your business, but there is a large amount of VA buyers out there right now that are wanting to list and sell and buy.
Mhm.
And I have had a few reach out to me in my own. So I went if you go through and get the information for the veterans that have closed their loans, say from 3 to 5 years ago,
Mhm.
that's a good source of lists to say, hey, you know, you can get, or if they don't even want to sell, you can say, you know, you can do another loan again, right?
Mhm.
You can get another house and probably get in with 100% financing. You have to check and see what your eligibility is depending on the sales price. And then we just run them through, tell them how much. But there's a lot of there. This guy, he bought a house 2 years ago because I don't like the neighborhood. So he's selling and buying something else, but he got a raise and now he wants something bigger.
Yeah.
I've had a lot of those recently.
I know you
So-
guys said you're getting a lot of VA people lately.
Well, there's a new VA facility going in. I don't know what it is, but there's a new facility going in over.
Well, they're expanding Cape Coral.
Right. So they're, and one of the guys, he's a psychologist for them, called me, he's moving here, he finds. So you should check in VA and see how many people
They're
are
all
moving
moving.
here. And say, hey, can I get their digits? Oh, that's something else. Yeah, but there's sources for you guys to be searching for these VA people. So.
Hmm.
Does anybody have any questions for me?
I'm gonna just figure out.
Yeah,
Fine.
go sit in front of that VA, Carol took that over, the Gunterberg Foundation, Carol.
Yeah,
What's
so
it?
you can sit out there.
You go sit out there and just,
Well, I know the
Give
DAB and all that,
snacks.
yeah. I'm just wondering if we can get in the tax rolls and search by mortgages, or do you mind? if
you
we
can
search
have
by
your word, you can
mortgages?
have your title company get you that information, you know that, right? Title companies can get you that information.
We do have a question on here. How does financing go as far as if you're using a VA loan for clients that are self-employed, especially those with inconsistent income, such as realtors? So realtors or
So,
independent contractors wanting VA loans.
so here's what we have in regards to that. We just closed a loan, Tricia's dad, the debt to income ratio on that was a 74. 74. Now, we didn't use the spouse's income because her credit sucks, but it's definitely a compensating factor as long as the residual income is in line. So VA has residual income. That's something you guys don't need to know. That's something we double check and verify. And whatever, if you have good credit and it runs to what, it doesn't matter, whatever it runs to, we'll do it. We'll do it.
But they have to prove their income.
They, oh yeah. you
That's
have
right.
to do
I
that.
think that's what I'm with the realtors. So
Now,
they can
here's
say-
another thing we do as well, okay? I had a dentist I did a mortgage for probably 6 years ago, 5 years ago, something like that. And he called me up about 3 or 4 weeks ago, dentist, and he's like, hey, I wanted to I heard rates were low, I want to refinance. And I'm like, you missed the boat. I mean, where you been? It's like rates are up, they went up, but it's still 1.5 points lower. So then I talked him into doing a 15-year, which is more, he's lowering it by 2.25 points, and he's cutting time off. He's a dentist up in New Jersey, which is fine. But when you're self-employed and you're doing a Fannie Mae loan, and they have COVID guidelines, and it's a lot. It's a lot of paperwork, especially if you have like 2 different corporations. I have a guy right now, 6 different corporations. I mean, it's a lot. It's a lot. And it's Fannie Mae, but we have to tell them up front that this is the guideline. But what I did with him, he has assets. He has retirement of over $1 million. So I set up a distribution. I use that to qualify him. Forget the tax returns. We set up a distribution. So if they have retirement money, then we had someone in our office tell someone they couldn't do a mortgage for these people. And then they went to another agent. Agent called us. We're like, oh, do you have retirement? Oh, yeah. We set up a distribution. We closed that loan and somebody in our mortgage office told them they couldn't do it. How's that? Yeah. So if they have retirement, we can use that.
Any other questions?
Yeah, so the follow-up question is, do they accept like monthly, quarterly, semi-annually, or a yearly income verification for VA?
I don't understand that question.
So independent contractors pay quarterly taxes. They prepay taxes.
We just take tax, we just go back to the tax.
So they're gonna have to
If they're
use-
self-employed, we're gonna use their tax returns.
So they've got to have a tax return. They can't do it on a half a year's worth of.
Yeah, we go strictly by the tax, VA is strictly the tax returns. The profit and loss is just a guide. Now, on an FHA transaction, I have to see a VA with file. On an FHA transaction, if we have proof of quarterly payments, that we can use the profit and loss as income. That is a guideline. I have fought and underwritten.
So the moral is sometimes VA is not for every veteran that you have. And talk to the lender and have them analyze the whole financial situation and see what loan would be the best.
I say show your income, pay your taxes. For a year,
That's always the best thing.
for a year. If they've been self-employed for more than 5 years, when we run them through GU, we're gonna get more than likely only needing 1 year's tax returns. But 5 years is the key.
Mhm.
And we can get away with it if they had a Schedule C before, and then they go to, you know how they go from Schedule C to a PA, right? So, because someone will say, oh, I'm incorporated for 3 years. Yeah, but before that, you were a realtor doing the same thing. You just changed the way you file your taxes. You've still been self-employed for 10 years.
Are you finding any of the COVID assistance things like like if they did forbearance or things like that? Is that affecting how they apply for a new mortgage?
Yeah.
Like a new property?
Yeah.
It's not gonna be a negative?
So there's certain guidelines on forbearance for FHA and for conventional, so they have different guidelines. So on a conventional, if they're selling their house and purchasing another home, as long as that house is paid off, you can close on yours the next day, not the same day, the next day. It has to be paid in full before you close the next day. But there's a lot of different guidelines because some of them are refinances and some of them are purchases. Now, on the refinances, they have had to have made the repayments, and we have to make sure there was no late. So
Hope that helps, guys.
I'm putting a class together. I don't know if anyone's been interested in, but I'm finding that people don't understand the process of mortgages. I am putting a class together. It takes time. I'm so busy right now. I've been doing nights. On how the mortgage process works and where your loan goes from contract to close. So I'm putting that together now. I think
I think that would be good.
That'd be an excellent class. All right. Well, very good.